From your mortgage to the price of groceries, the bond market affects more than you might think, but it's often misunderstood. Here to shed light on how we can get to know our money a little bit better is Debbie Dobbins, wealth strategist and founder of Debbie Dobbins, Inc. Glad to have you with us.
Thank you so much. I'm so excited to be here. And I took a trip to Charleston recently and got to go to the old exchange. So
Yes.
I want to talk about bonds from the Revolutionary War up to today.
Perfect, perfect. Well, no better place than to start at the beginning, more or less. So why don't you share with our audience exactly what the bond market is?
So the bond market, as I said, we use bonds to fund the Revolutionary War. That's how old are, and before that. And bonds are simply an IOU. So if I buy a bond, I'm lending money to a business or to the federal government in the case we're going to talk about. And when we lend money to the government, they're supposed to use it efficiently. Well, we've seen that maybe that doesn't always happen. And yet the bond market is so directly tied to everything that we do in life. And most people don't even remember or know what the bond market is, except for when their grandma gave them a bond
That's
when they were
right.
13 years old and they said, "Oh, this is going to turn into money someday."
Yeah.
So think about the bond market is just like the stock market. It's traded very similarly. It's also a safe haven for investors, and they go into the bond market to keep their money safe.
Hmm.
Now, what happens is most people think that the Federal Reserve is setting interest rates. They do not.
Hmm.
They set
Hmm.
the federal fund overnight rate, which is what banks borrow money between themselves. The bond market then actually anticipates what they believe the Federal Reserve will do. So it's just like the stock market. They're anticipating what the economy is doing and they trade accordingly. But the bond market actually sets mortgage interest rates, your credit card interest rates, your car loan interest rates. Even though the Fed is setting the overnight rate, the bond market trades every day. And just like the stock market, it could go up and down and fluctuate all day long.
So let me
So if
ask
we
you
look at it
this.
from that,
Right. Let me just ask you this question. So, for someone who's thinking of investing, is a bond a good way to start investing?
if you're going to invest, a bond is a safer venue to invest in. It's not as volatile as the stock market. However, right now the bond market is a little bit diluted because of what the Federal Reserve does. And I think it's so interesting that the Federal Reserve is an entity that we don't pay attention to as a normal citizen because they're not elected, they're not one of our three pillars of government, but yet they are driving so much of this. As a matter of fact, back in 2008, and I want to tie in mortgage-backed securities because
Hmm.
that's the mortgage secondary market.
Right.
Those are called bonds as well. So those are traded on the bond market.
Hmm.
The secondary market and the mortgage-backed securities are actually those things that were underwater back in 2008. And what
That's
the
right.
Federal Reserve did was they put a bunch of money up to the tune of $7 trillion to buy back bonds, which basically the Federal Reserve loaned money to the federal government that they didn't have.
Mm.
So what we find is inflation.
And that's what we're experiencing right now. And so,
Yes.
is now a
Yes.
good time to be investing in bonds? And is the typical investor doing so? We hear so much about Wall Street and stocks and things like that. But is grandma still getting bonds for her grandchildren as a way to start
Yeah.
putting money away in a safe place?
So when you buy a bond, typically when you buy a treasury bond like that, it has a face value and that it has a maturity value. So those are been safe for a number of decades. So it's going to be pretty safe. And it's a safer investment when you know how much it's going to mature at. The thing about the economy, though, is that we've created this experience in our economy that's very inflationary. And
Hmm.
so everybody's talking about affordability. And the only problem with most people is that they don't understand how to play the game of this thing called economy or money itself.
Right.
So, because I'm a wealth strategist, I teach people how to understand those things so that you can actually play. Because most people don't understand that it doesn't matter what the economy is doing. We don't have to rely on the government to fix us. We can play within the economy. And the economy right now, the stock market is a hot place.
Hmm.
I mean, it has been for months now. And yet the bond market is what is a safe haven. So people go into the bond market to be safe.
I see. All right. I know you don't have a crystal ball, but what is 2026 going to look like?
2026 is amazing. I am so excited about 2026. The policies that are being put in place right now, because I understand how the economy works and I've been watching it for 30 plus years,
Yeah.
is that they are taking into account not just the inflation, because inflation is just the pain of high prices. If we don't have wages keep up with the pain of high prices, that's when we feel being blindsided when you go into the grocery store or to
Sure.
the Walmart.
Yeah.
You feel like you're being, taken advantage of. So
Yeah.
we're getting wages up, and that is where we will have this robust economy in 2026.
I love that. And I think no better way to end this segment. But I do want people to know that you do have a podcast, and it is called Radical Responsibility Revolution. I don't think people can learn enough about their money. We work hard for it. We got to make it work for us. I want to thank you so much,
Absolutely.
Debbie, for joining us today.
Thank you. Thank you so much.
We'll be back after this.